Hello, everyone. It's Olu of Trades here, and I thought to record this video for my inner circle guys, basically to show you the things I've been trading over the time, and it has kept me to some extent profitable, and I have been doing pretty good with it. So I want to just explain one or two things with you guys that could help in boosting your trading, right? That would help in boosting your trading and just remind you of some things that you have learned before and probably forgotten. And yes, so this is it. So let's get into it. I know it's been a long time coming, right? So let's just get into it quickly. So today, I want to talk about a few things in this video, and I want to keep this video as short as possible. So give me like 30 minutes, I should be done with this video. So we'll talk about a few things, right? And those few things are, one, we'll talk about QMR. We'll talk about 3 types of liquidity. And the last thing we'll talk about is structure, or the first thing we'll talk about is structure and POI, right? Structure and POI. Where's that hand again? Okay, and POI. Okay. This new keyboard is something else. Structure and POI. So let's just start with structure, and then we move from there to QMT, to 3 types of liquidity. We start from the bottom to the top. So for structure, let's look at a bullish scenario. You know, when we have a bullish scenario like this, I'll show this in like 5 minutes. We have a bullish scenario like this, you know, we expect price to just come back to 78.6% of our Fibonacci level and bounce again. However, in so many situations, price does not just do this. Typically, this is like straight lines. But in real life on the charts, price does not really do this the way we expect it to do. All right? Price would many times go around and do and create liquidity, engineer liquidity, and then sell off there. But this is basic structure. All right, this is basic structure. Same thing for sell, right? In the sell scenario, you know, we have the lower lows, we have the lower high, the lower lows, the lower high, the lower low, the lower high, the lower lows, right? But then in a structure that has liquidity, which I want to explain, is in a bullish scenario, would have a higher high. We have a pullback like this that probably sweep this low, and then we have a sweep of this high, and then we have this, and then we have another break above this structure, and then price does not just come here and bounces. It might do this. That's not your issue. Your issue is this extreme low. Price will come back here and then buy from here. This is structure. All right, this is the structure I want to explain here. Okay, this is the structure I want to explain here. Let me move this one this way. So this is the structure I want to explain here. This is a bullish structure. If price wants to continue from here, price will come down, right? Probably create something like this, break the structure again, create, take out this low, break the structure, engineer a liquidity, take out the structure again, and then come right back down into this place and buy. Do you see it? This is where we have our, this is our lower high, higher high, lower high, higher high, lower high, higher high, lower high, higher high. So when you are looking at the chart like this, you realize that you can draw your trend line, but your trend line will touch just major troughs. There will be some in-between liquidities that formed. Either it's on a trend line situation or on a range situation towards the sideways movement. You will see that price would always engineer liquidity. And that is what I would explain in 3 types of liquidity. Okay, so this is basic structure. Now, why does price create these things? Let me quickly name them. This area here is the sweep, right? Price sweeps this low. Once there is a sweep, we need to see a break of structure above. We need to see a break of structure above. Once price breaks that structure, then we know we are up to something. That validates this sweep, but it does not validate our entry yet. It validates the sweep, but does not validate our entry yet. So what validates our entry? What validates our entry is structural liquidity. A pullback in this level. Structural liquidity is what validates our entry. After a structural liquidity is formed, we have another break of structure. Then we can now anticipate our entry, which our entry would be this QMR area around here. This is where our entry will now be. And then we'll have our buy set up here. Our stop loss will be below the low of the sweep, and then we target 1:3 or more, depending on what you can afford to risk. And then price goes for it, right? So let me do it, right? So I've talked about three things there. I talked about the QMR, I'll explain QMR, and then this, we call it Quasimodo, right? Quasimodo reversal. Quasimodo reversal. QUA, Quasimodo reversal. QUA, SSIND or something, reversal, right? So when price takes out the sweeps the low in a bullish scenario and takes out the high, what it has taken out here is called the transactional liquidity. You can mark that down. What I've taken out there is the transactional liquidity. Okay. Transactional liquidity. That's what I've taken out there. Transactional liquidity. And as you can see, it happened again here. It happened again here. After it created the structural liquidity, after it has created the structural liquidity right here, it broke structure again. This structural liquidity right here. It broke structure again, and it took out the transactional liquidity. Why is it transactional? Because it keeps breaking structure. If we are on a buy trend, right, some people would want to start selling from here. So you take that out. Those are liquidity. People that want to sell from there, transactions that want to sell from there. Those are regular transactions, right? You take that out again. And then it comes to sweep the structural liquidity. Then once a structural liquidity has been formed and a new high has been taken out and a new high has formed, taking out the transactional liquidity, then we have our protected lows. Why is it protected? That's what I want to explain now. A moment. Protected. Why is it protected? Why is it protected? First of all, you cannot call it protected until it's a sweep, right? But it cannot be protected until a structural liquidity has formed and then the transactional liquidity has been taken. To be careful, I always say, let all these things play out before you do anything else. Before you do anything else, let all these things play out. So once our structural liquidity has formed and a new transactional liquidity has been taken out, then we have our protected lows. You can put your stop loss below that one, knowing fully well that price should not get there. Okay, that price should not get there. Let me move this this Quasimodo behavior down one bit. Hold on. Okay, so the reason why I'm doing this, Okay, so the price comes into the Quasimodo. Now, why are you picking your price? Why are you picking your entry off this place? Because there is for a bullish scenario, most times there will be a bearish candle before it pushed to the upside that came to sweep this place. That last bearish candle here before the bullish move that caused this sweep, the last bearish candle here is where we normally pick as our passive model for our entry. And then what makes these things valid? From if you put your Fibonacci from here to the sweep low, there is a 50% Fibonacci that I always use. Good. Your structural liquidity should be below the 50% zone. Your structural liquidity should be below that is where if it is above, let me move this one. If your structural liquidity is above the 50% zone, then you shouldn't look towards it. Forget it until a new liquidity forms in that area. Forget that there is liquidity formation there. All right. And your structural liquidity must form below your 50%. It's the same thing for the bearish scenario. It must form above the 50%, between the 50% and the 100% of your feed level. All right. This is like 0, 25, 50, 75, 100. It must form below your 50, either directly on your 50 or within 50 and 100. All right. Then you anticipate a sweep below that point. Right. So this is structure. This is structure. And that moves us straight into, this video shouldn't be long. That moves us straight into the 3 types of liquidity. Okay? But before the 3 types of liquidity, let's talk about POI. Why did I pick here as my POI? Like I said, there is a bearish candle formed here before the bullish move. I think I need to look for, okay, this trade, I can't use this trade because this is a little bit different. But I need to use something else to explain it. So let's come into the chart and let me explain with a typical example of a sweep, structural liquidity, and everything coming to play. I want to look for it on a 4-hour time, so it's easier to explain. Obvious. Okay, let's look at this. Let's use this as an example. This is a bearish scenario, right? This is a bearish scenario. In this bearish scenario right here, we had our sweep formed here. We had our sweep here, right here. Look at that sweep. There was a sweep, right? And, and there was a pullback down, and then a pull-up that formed our structural liquidity, right? If we put our Fibonacci to calculate to see if we are right, from the sweep to the point that caused the sweep, right here, we'll see that our structural liquidity is way into the 50%. This is the 50% level here to the 100% between the 2x. So we see very well. Between the 50% here to the 100% here, right? So it makes it very valid. Makes it very valid. Makes it very valid. And then, but this very scenario, we don't have a Quasimodo. Why? Because our liquidity formed above. The first one that picked the Quasimodo here did not sweep any structure, so it wouldn't have been valid. But then we had a push-up here that eventually came to sweep the lows here and created a new structural liquidity for us right here. Right? As it took out this transactional liquidity, then it made our structural liquidity valid. So at that point, we had our protected highs here. So if you were to take this trade, you would have waited for price to come back to this liquidity here. And your POI, that's what we are talking about, right? Your POI, target 1:3, or just target the sweep right there. And that was a straight move. Your POI would have been this other block right here. This other block right here, this other block, as little as it is. Yes, that would have been your POI, and you would have just taken the trade, and then you have sold off almost immediately, right? easy as it is, straight up like that. All right. I want to look for one with the Quasimodo. Okay, so while moving around, I saw another example here on the 1 hour time frame that I took. This was a 1:3 that really made a lot of sense to me, right? So I'll explain it. I'll explain it quickly in the same terms. Let me take away all of this, guys. I like leaving some of my winning trades and some losing trades on my chart. I love leaving them there for one reason. It helps me come back and recover mentally that, oh, you did this thing right at this point. I can't remember if I took this trade on the 1 hour time frame, but I think it's the 1 hour time. So we had our sweep here. We had our sweep here, right? We had our sweep right here. And immediately after that sweep, price pulled up. This is another scenario of creating structural liquidity, right? Price pulled up and created structural liquidity right here. And if we are to put a measure to this, right? To this, but pull down to that sweep, we will know that we are our structural liquidity formed in the right spot, right? Below the 50%. You can see it. You can see it right there between the 50% and the 75%, right? So we are very correct to take that trade. You can see my settings: 0, 0.5, 0.25, 0.75, and 1. You can see my settings right there. So I confirm that. And then for our Quasimodo entry, look at the last bearish candle on the 1 hour time frame that before the push up that caused our sweep. So that is where I just marked as my risk entry. And the reason why I marked as my risk entry is because it is not below the structural liquidity, right? That's why I marked as my weak entry. My major entry was here. Let's just go to the 15 minutes time frame and look at it there. 15 minutes or 5 minutes time frame. Let's go and look for it there. Network is a bit slow. Let's go and look for it there. There. This is the current trade. I mean, so that's with another entry style. But let's go and look for it. We are like basically, I just wait for price to come. I repeat the same thing, price has done, and then I bounce, right? I mostly don't share these things because I've not really been on my chart. So when I just see it, I just set it and leave there. I just forget it. Most times I forget that I have actually set an entry many times. I just come back and see that, oh, this trade actually, wow, nice. And then I bounce, right? So that was my risk entry. But then this was the last bearish candle on 15 minutes time frame. So this one, I didn't use this one. I actually used this one. So my entry was here, was right here. And my stop loss was below the protected lows. And what made that low protected? Like I said earlier, the low became protected as soon as a structural liquidity was formed. A structural liquidity was formed and there was a break of structure. That break of structure being our transactional liquidity being taken out, right? Right, if you remember, being our transactional liquidity being taken out. There was a break of structure right there. And you can see our price ran right into our entry and swoosh gave us, I think my TP was right at the stop here. I say no matter what, price will take that transactional liquidity again. And then that was it. Price took out that transactional liquidity. And that was a sweet 1:3, 3.8, almost 1:4 on that trade right there. And that was it. There was another trade I was expecting USD CHF to do. Let me show you guys. But it had not done it. But I will explain. It's a bullish scenario as well. It's a bullish scenario as well. Let's go to the 1 hour time frame. 30 minutes. Let's go to 30 minutes time frame. I think that's where I basically saw that trade. It didn't come back, but it would have been very nice to actually come back. I've forgotten. I think I've forgotten that. Sorry. Okay, I've seen it. All right, guys. So we had Look at that. Look at this sweep right here. Look at this sweep right here. Look at this sweep right here. Look at that sweep right there, right? Look at that sweep right there. I will explain something when I'm done looking at the sweep, right? Look at that sweep right there. Let me mark that so I don't forget it. I still expect price to come back here. So I'm going to just set it, okay? Let's go to 5 minutes time frame so we see it better. Even though I don't like taking trades on this, but I will explain why I came to this low to take this trade. Let's go to 15 minutes time frame. I think I took it on the 13 minutes time frame. But I want you to see the sweep very well. That's why I'm coming this low to show you. Right? So that's the sweep. And then price went up, took out this transactional liquidity. So it made it very, very beautiful. Took out transactional liquidity, came down, created the structural liquidity right there for us. And this is like the extreme low for me that price has come to. If you look around, there has not been really one serious structure that formed a sweep and all of that. You can't call all this ones a sweep. They didn't really form the structure that I really love. Even this one that looks like a sweep did not give us a structural liquidity that I would love. I don't like the structure. I like my structural to form like this, right? Form like an A shape or a V shape. You should write that down. Your structural liquidity must form like an A shape or a V shape, right? So this one that did not form, I'd rather just let it go. Okay, so if you look at this structural liquidity here, it formed an A shape and a V shape. You can see that. So price has just been going up since then. After forming our structural liquidity right here, we have another transactional liquidity taken out here. Do you see? So this is USD-CHF. So I'm just waiting for price. I want to put my entry right here. I just expect price to sweep that. And then 8.8 pips right there. And then let's see price take out the structural liquidity up here. This is my gauge for this trade. And that's our, that 1:4. That's 1:4. Yes, that's 1:4. So this is what I expect price to do. I'm still waiting for price to do this because now we have the protected low here. And I want to see price take out this protected low nice and easy. All right. So you should take this trade if you see it. Okay. So I believe we've trashed. So we've tracked types of liquidity. Let me just put it here. Quickly. Let me go to 20. So we track types of liquidity. We have 3 types of liquidity. We have transactional liquidity. That's one, transactional liquidity. Secondly, we have structural liquidity. So remember, transactional liquidity is like your normal break of structure. The structural liquidity is like the one that forms within your 50% zone, right? That forms within your 50% zone right there. That forms within your 50% zone right there. Forms within your 50% zone right there. From this low to this high. To appraise the structure that forms the structural liquidity to the sweep. You can see that your 50% zone is rightly formed. And then we have the final type of liquidity. I didn't say which. Oh, okay, so let's write it again. We have transactional liquidity. Transactional liquidity. We have structural liquidity. And then finally, we have inducement liquidity. So this inducement liquidity is what I want to explain next. Now, if there is no structural liquidity, your sweep low will be where price will come and take as its liquidity, right? So I would like to look for an example to this. And it will still go in your direction, but it will come and sweep your lows first because there's no structural liquidity. So I always advise, if there's structural liquidity, leave that trade, except you have like a lot of pips to spare. All right. Let me check. Let us just check the 4-hour time frame of USD-CHF. 4-hour time frame. Let's look for structural liquidity that was taken out and price still went our way, right? These are situations where there is actually a sweep. You will see your sweep, you will see your break of structure, but once there is no structural liquidity, then it will induce the lows that were meant to be, or the highs that were meant to be protected. It will induce it. It will induce it. This should be a sweep here. This should be a sweep here and a break. But if you look at something that happened here, if you look at this low here, it induced this low. But indeed, it did not induce it the way I would have wanted. Look at it. Induce the low and use the low as liquidity instead, and then as you can see it. This is why I'm even buying USDC. I want to join this price right here because it has induced this liquidity. Yes, there's no more liquidity at this lower part except imbalances that are here. There's nothing else wants to come down here to do, right? So maybe until it finishes its job, then it will sell, right? Maybe until it finishes its job. But I'm seeing something now on the 4-hour time frame that looks like our entry. This is a sweep. This is a sweep. This is structural liquidity that formed that has been taken out right here. And then the break of structure right here. Something that takes out structural liquidity right here. And then price has come here. But then, if you look at my trade, you see that I am not targeting to even to buy up to that top because somehow that top is still protected to me. So I want price to just come, give me what I want here. I'm probably sell off. You see, guys, I'm probably just sell off. All right. So that is inducement liquidity. Where there is no structural liquidity, price will use the protected highs or protected lows as inducement liquidity. All right. There is a trade I just triggered on US30 for me. Let's go and check it together. I just saw the alert. Now I don't even trust the trade anymore because gold has been bullish and same as US30. I think I saw this trade on 1 hour or 30 minutes time frame. And I'm taking this trade based on breaker block, not based on any other thing, just based on breaker block. So this is my trade here, based on this block here, failed block here, right? This is a zone that failed here. So it's just like a break and test. I'm taking this trade based on break and tests and then sell. So why did I now finally take this trade? Because price created liquidity right here and broke structure. And there is a POI here, right? So what I expect price to do now is it tried to take out the structure here, but it did not break the structure again. That is why it's not a low probability trade. So I went to reduce my lot size. I actually wanted price to come back and break the structure before coming here. But as soon as it didn't break down and started going up, I went to reduce my lot size because it's now low probability trade. My entry is just here, actually just triggered, and I'm targeting this low. Where's my low? So I'm targeting this low for my TP. If it eventually goes my way, good, and if it doesn't, still good. All right, so that's it about that. And in between, we talk about Quasimodo entry. That's for your POI. And I want you to just go back, study these things better. Just study it, go back to your chart, and let's see what we can make from these trades, right? Let's have a quick look at gold and see what gold is doing. I really don't see anything gold is doing here, right? Gold is going to take out these highs because there's no structural liquidity around here. There's no structural liquidity. Even though this looks like a sweep, but there's no structural liquidity that took out these lows here, right? So I expect gold to take out these highs. So if you want to buy gold, just keep buying gold. It's going to take out these highs before it now decides what it wants to do. So we're still going to buy gold for now. It's going to push gold up. and take out the size before anything. So guys, that's it. I just wanted to share this from you so that we can go and study this before we move into something else entirely. See you guys in the next video. Cheers.